Welcome back, and you're watching The Money Show. It's time for a very special segment, SBI Bharat Nivesh. The beginning of the month often marks key financial activities, salary credits, bill payments, planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. Now, to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIPs or ensure your existing SIP continues. So go on, set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. And today, on this very special segment, we are going to be talking about Special Investment Fund. That's right, SIF. And let's elaborate more on this. I'm joined by Hemant Rustagi from Wise Invest to help you understand this category and also if you should be the right one to invest in it. Hemant, hi, good evening. Welcome to the show. And much talked about category SIF, and definitely we are looking at fund houses coming up with this particular category. But then, let's decode this, and it is a category where even a retail investor wants to invest slightly higher amount, can take interest in it. But what exactly it is, what does it entail?
Well, Kavita, as you rightly mentioned, I think this is a new option which is available, especially for, if there are mutual fund investors who have already built their portfolio and are looking at different strategies to add to their portfolio. So this is a product basically meant for them. So earlier what was happening, you had mutual fund on the one hand, then you had AIFs in PMS, and as you know that the minimum amount in PMS is 50 lakh, and AIF is 1 crore. So obviously it was not possible for everyone who was looking at adding different strategies to the portfolio to invest in those because of the higher minimum amount. So then there also were a number of instances, Kavita, as you know, that where investors were trying their hand at derivatives, future and option, and burning their fingers in that. So I think SEBI thought that it's a good idea to ensure that anyone who's looking at adding these as a strategy in their portfolio should get an opportunity, and the money should be entrusted to the professional fund manager. That's where the SIF has come in. So if I were to explain that in a simple way, SIF allows you to invest in, like I said, different strategies. There are 3 categories of SIF, which is equity-oriented, debt-oriented, and hybrid-oriented. And SEBI has allowed them to have 7 different strategies, all put together for these 3, which is long short primarily on that in that area. So, like I said, if someone is looking at building a portfolio or adding some option beyond the long-only mutual fund, they can look at SIF as an investment option.
It's brilliant now. But then tell me something, can this be a part of your core portfolio, or is it something like an add-on or a niche investment that one should be looking at?
No, clearly, first, like I said, these are complex strategies. When we talk about long, short, we are talking about using derivatives. So there are different complex strategies which are there. So obviously, it's not suitable for every investor. So in my view, if you are someone who is in the process of building your mutual fund portfolio, you should ensure that the mutual fund portfolio remains the core of your investment process. But if you are someone who has built a larger portfolio, has had experience of investing in mutual fund over the last maybe 4, 5, 7 years, and now looking at expanding your investment universe, you can look at that, provided, like I said, considering the fact that there are complex strategies here in this, your collar strategy, strangle, different strategies, unless and until you understand those, to the extent that you know the pros and cons of this, it's not meant for you. So it's only when you kind of build a portfolio of a decent size, have had experience of investing in equity, you should be looking at that.
All right. Now, when we talk about fund charges, because definitely that's been rationalized now. But as far as SIF category is concerned, what are we talking about in terms of, performance fees and other additional charges of the fund?
Well, I think we need to look at, Kavita, clearly this being in the recent changes, obviously that has not been touched there, that has remained where it was. They're not really prohibited in terms of, if you're looking at, because it's allowing you to add some new strategy that you're paying a very high expense there. But the key factor, like I said, the basic advantage I feel for including SIF is that even if you look at, for example, hybrid category, even if you're looking at reducing your equity exposure, your returns can still be in the line of what hybrid funds are giving you. So the charges are basically, like I said, not prohibitive. They are very reasonable, and for a new product that allows you to invest in these kind of strategies.
For an investor to understand how these funds work from a fund manager's point of view can be slightly technical and difficult, as compared to a normal mutual fund, a regular mutual fund. So when you are comparing performances, when you're looking at or analyzing performances, what are the main things that you should be looking at, or maybe a deciding factor? How should we, to buy an SIF, what should you look at?
Kavita, these SIFs have just come in, so there's
Right.
obviously no performance track record. So we can't really judge, these funds on the basis of performance, or we can't base our decision based on the performance what they've shown so far. It's too early. It's just been a few months. So I don't think that's the criteria. But like I said, I think the main issue is, are you someone who feel that I have built a reasonably large portfolio of mutual funds, and also the fact that I've gained experience, my risk profile allows me to look at an investment option which can be slightly risky, but has the potential to give me slightly higher return, and also allow me to add different strategies. See what happens in the mutual fund, for example. There are long-only mutual funds. They can use derivative only to curtail the risk. They cannot use derivative for generating return for you, which is what these SIF can do for you. So if you feel the need that you're at that stage of your investing process where you need to add these strategies because you want to look diversified, not only in terms of number of funds across sector, across segments, but also in terms of different strategies. So I think then only at that stage you should be looking at that. And like I mentioned earlier, you do have an option of investing in PMS or AIF, but considering the fact there are two important factors. One is the minimum that you need to invest in those two options. And also, like if you look at PMS versus SIF or mutual funds, the taxation. In the PMS, any short-term, long-term capital gain, you have to pay tax, whereas SIF is exactly on the lines of mutual funds, whereas you pay tax only when you transact. Otherwise, you're not paying any tax on that. So I think this is a product category which is in between PMS, AF, and on one side, and then mutual fund on the other side. But right now, if you as an investor have to make a decision whether you should be going for SIF or not, it clearly depends on your risk profile and your intent of adding new or different strategies to your portfolio. I think that's a starting point. You see, even keeping this in mind, the number of funds that have come in, they're all in the hybrid category so far, right? The three of them, the first three ones are in the hybrid category. That's exactly the reason. Looking at the market condition, the fact that the markets have not done much in the last 15 days, hybrid SIF gives you an opportunity to invest in multi-asset strategy, which is equity, debt, derivatives, right? You even have commodities like gold and silver, REITs, InvITs. So this is a strategy that allows you to have a multi-asset portfolio. But like I said, with the benefit of using derivatives to generate returns for you.
All right. I think there are a lot of other aspects to this particular category that we need to deep dive. But then my time is up for this particular segment. Thank you so much, Hemant, for being a part of this show and helping our viewers and walking us through to all the nitty-gritties related to SIF. And with that, it's a wrap on the Money Show as well. Thank you so much for watching. But before I sign off, I'm going to leave you with our WhatsApp number and our email ID where you can send across your queries, anything about mutual funds, insurance, or your detailed personal finance planning that you need. Our experts are there to help you send across your queries. Thank you so much for watching. Goodbye.